So I found out exactly what the government knows about FTX and this whole scandal going on, and today I wanted to take a deep dive into all of it, starting off on Twitter, then actually getting into a little bit of paperwork, which I know may sound boring, but this is where all the good stuff is, okay? Now let's hop right on into Twitter because that's where everything starts these days. And before we get started as well, make sure to follow me on Twitter. I just started using the app. I've had the account since like 2018, but I'm just starting to use it. I would appreciate it a lot. Now, we had talked about Sam Bankman-Fried not wanting to come testify in front of Congress. He says he doesn't have all the information, yada, yada, yada. But a few hours ago, 10 hours ago exact, he said that he replied to Maxine Waters because everybody was giving Maxine Waters a lot of hate because she wasn't going to subpoena him. She should subpoena him to show up in America to go in front of the Congress for the hearing or the committee. I don't think she's going to do that. It happens. It's called bribery legally. I don't know what you want to call it, donations. But here we go. I still do not have access to much of my data, professional or personal. So there is a limit to what I will be able to say, and I won't be as helpful as I'd like. But as the committee still thinks it would be useful, I'm willing to testify on the 13th. Now, he goes on to say a couple more things here. I will try to be as helpful during the hearing and shed some light on what I can on FTX US solvency and American customers, pathways that could return value to users internationally, what I think led to the crash, my own failings. I had thought of myself as a model CEO who wouldn't become lazy or disconnected, which made it much more destructive when I did. I'm sorry. Hopefully, I can learn from the difference between who I was and who I could have been. And he said some stuff before it. That's not too important. Okay. Now, the fact that he says he could testify, that can mean a few different things. He can give written answers to testify, which is easier for the lawyers. That's what the lawyers would like. He can go to Washington, D.C. to testify, which would be like the doomsday scenario for him. Or he could stay in the Bahamas and do a virtual like Zoom calls because COVID kind of normalized the Zoom culture as far as the committees are concerned in Congress. Those are his options. We don't know which one is going to happen just yet. All right. Now, I have been looking for this every single day, but we finally got the update for when this hearing is. And I know we've known the 13th, but now we can actually see the witness list and everything like that, okay? Now, right now, the witness list only includes John J. Ray III. Nothing about Sam Bankman-Fried and nothing about any of the other employees of the company. Nobody else. Just John J. Ray III. And possibly Sam Bankman-Fried once we understand exactly how he's going to testify in front of the committee. All right. Now, if you go over here and you click on the name John J. Ray III, you may feel like you might just be finding a background information on this guy. That's not what you're going to be using. That's not what you're going to be finding out. If you click on it, it actually opens up this whole page here with about 4 or 5 different documents explaining exactly what they know and how they know it by using different sources, including some of the crypto sources that we all know, because we don't really trust, all the Fox News, CNBC, CNN, Bloomberg. We don't always trust them to report properly about the crypto markets, for good reason, I might add. Okay. Now, this was made December 8th, and it just was put out today, so that's good. So it was just put out, made yesterday, basically. And the full committee will hold a hearing entitled Investigating the Collapse of FTX Part 1 on Tuesday, December 13th at 10 a.m. Eastern Time in room 2128. So any of you guys live in Washington, D.C. and you want to go look at it, check it out, I think you guys will have the opportunity. And you can see right here, there will be at least one panel with the following witnesses. John J. Ray III, Chief Executive Officer, FTX Group. There's no Sam Bankman-Fried. If they update this, I will happily let you guys know. All right, and they'd say additional panels and witnesses may be added later. And I want to let you guys know this is only part 1. They make sure to say it's part 1 because they want to make it into a little series because they've gotten used to with that January 6th hearing. They've actually gotten a lot of producers into Congress, so they're trying to get this into more of a show to kind of boost up ratings for both parties, which is incredibly crazy, but it's the way the world works now. All right. But this background here is where I find everything so interesting. Like, this is why it feels so important to me because we can actually see exactly what they know. And it seems to be pretty general information with a few tidbits here. And those tidbits are what the FBI is going to be focusing on, okay? Now, I'm going to let a lot of you guys read this yourself, but we're going to go through just a little bit and then I'll go to the tidbits because I know this thing could get really boring if we just read all of this, okay? Maybe I'll do a robot voice and I'll have it all read to you guys. But okay. FTX, a global cryptocurrency trading platform, was co-founded by former Chief Executive Officer Sam Bankman-Fried and former Chief Technology Officer Gary Wang in 2019. FTX allowed users to buy, sell, hold, and lend many cryptocurrencies, as well as trade on margin derivatives of these cryptocurrencies. FTX at its peak was the third largest crypto exchange in terms of daily trading volume behind Binance and Coinbase. All right. Now, I'm going to move down here a little bit. But this all just talks about them being in the Bahamas and stuff like that and other stuff. Just kind of setting up everything. They go over fees, right? Just a little bit of fees. Yep. All right. And then they go on to say neither the main FTX exchange nor FTX US were registered and overseen by the SEC or CFTC. However, FTX US was registered as a money services business, MSB, with the Treasury Department's Financial Crimes Enforcement Network. That's how they can get them. And FTX listed almost all states as states of MSB activities, excluding New York. FTX US Derivatives was registered with CFTC since 2017 as a designated control market, swap execution facility, and derivatives clearing organization. This allowed FTX to operate a derivatives trading platform in the United States in addition to crypto asset trading. FTX US, through acquisitions, also owned FTX Capital Markets, LLC, which is an SEC registered broker-dealer and embedded clearing LLC, a securities clearing firm registered with the SEC. So they have a lot of connection to the SEC. Not like immoral ones, although they have those. This is not proving that. It means certain parts of FTC, the empire, was actually overseen by the SEC, which is why all this stuff about Gary Gensler, we're going to see more about his muck over the next few months, I believe. Hopefully enough to get him fired or at least replaced and him like get demoted. Asked to resign, I think it's the way to go these days. All right. And then they kind of go over to the overview of events. On November 2nd, the crypto media platform CoinDesk reported a leaked balance sheet from Alameda that showed $3.66 billion of its $14 billion in assets were unlocked FTT. $2.16 billion were listed as FTT collateral, meaning that over $5 billion of the company's assets held in FTT. On November 6th, in response to reporting that suggested FTX's potential bankruptcy or insolvency, Alameda CEO Caroline Ellison tweeted that the balance sheet info, which had been circulating recently, showed only a subset of Alameda's corporate entities. Later that morning, Mr. Zhao, founder and CEO of Binance, tweeted that Binance would liquidate its holdings of FTT due to the recent revelations that have come to light. Then Ms. Ellison offered to buy all of Binance's FTT tokens for $22 per share. Other FTT holders started to sell, and FTX reported experiencing $5 billion in exchange withdrawals. And you can see all the sources right here as well. I'll also post this link down below so you don't have to go through all the bureaucracy to get the document. Okay. By the close of November 8th, the price of FTT had dropped below $5 per token, and FTX reportedly sought more than $1 billion and possibly up to $6 billion from investors before turning to Binance for possible acquisition. Okay, now, this kind of goes through all this stuff, and I'll make this into a robot video for you guys a little bit later, but you guys can understand they have a pretty decent understanding of what the news understands so far. They filed bankruptcy, stuff like this. But here's where things get a little bit more interesting again. Use of customer assets and risk management failures, investigations and lawsuits. This is where the juice is, okay? Now, FTX.com's terms of service with users said it would not trade customer funds. Mr. Bankman-Fried also tweeted indicating that this was true on November 7th, stating that FTX did not invest client assets, even in treasuries. However, FTX lent out $10 billion in customer assets for proprietary trading with Alameda, and reports indicate over $1 billion is still missing. An attorney for FTX said during the first bankruptcy hearing on November 22nd, a substantial amount of assets have either been stolen or are missing, and that substantial funds appear to have been transferred to other silos into Alameda. So this might mean that actually money got sent over to Alameda. Now, risk management failures. Several commentators, in addition to Mr. Bankman-Fried, have suggested a complete absence of any risk management at FTX. In a December 1st interview with ABC News, where Mr. Bankman-Fried admitted that if he hadn't spent an hour a day thinking about risk management, or if he had spent an hour a day thinking about risk management, he could have prevented FTX's collapse. He claimed, "I wasn't even trying. I was spending any time or effort trying to manage risk on FTX, close quote. Furthermore, made public through the FTX bankruptcy filing, showing that neither FTX nor Alameda had an accounting department. They didn't have an accounting department when they managed billions of dollars of funds. That's insane. Okay. And FTX expenses, including large transactions between FTX-owned entities and high-value executive expense reports, were approved in chat messages with emojis rather than formal processes. You got to have a paper trail. That's part of the process. Not doing that is illegal, and that's why I told you guys about the umbrellas that they were under with the SEC earlier in this conversation. Now, going over to investigations and lawsuits, prior to filing for bankruptcy on November 9th, about a month ago now, there were several reports that the Department of Justice, DOJ, Securities and Exchange Commission, Commodities and Future Trading Commission, and SD New York, Southern Department of New York, have ongoing investigations into FTX. On November 21st, the Southern District of New York Attorney General's Office announced that FTX was part of a broader investigation into crypto platforms that it had been conducting for several months. On November 16th, a class action lawsuit in the United States District Court for the Southern District of Florida seeking $11 billion in damages was filed against Mr. Bankman-Fried and various celebrities who endorsed FTX on November 29th, the day after the filing for bankruptcy. Okay, so there's two things I want you guys to take away from this. First of all, Southern District of New York, they're not really investigating FTX. They were kind of investigating crypto broadly, and now this has just come under the scope a little bit more because of the disaster. However, November 16th, a class action lawsuit in the U.S. District of Court for the Southern District of Florida. Florida seems to be moving much more aggressively than New York is right now. That may be because of Democrats control New York, Republicans control Florida, or it could just be that Florida just, has a better mechanism to really get to go after corporations. Because, New York is more corporate friendly, hence why it has a lot of corporate business out there, right? So there's a little bit more goes into here, impacts on the crypto industry beyond regulatory structure. We'll have to talk about this in a separate video because this is just a whole other thing besides all the crypto fiasco with FTX. But I will be putting this whole thing into a robot video so you guys can listen to it if you want. It was pretty eye-opening to me, and I hope it will be pretty eye-opening to you if it wasn't already. So I'll see you guys a little bit later tonight, but gosh darn, people, watch out for this. This is going to be a good hearing on Tuesday, and then I'll be there streaming it just so you guys can watch.